I'm going to show you one simple strategy that you can use every single day that's going to give you a very high probability of being able to cash in. So the first thing you want to do is pull up SPX because we are going to be doing some 0 day to expiration trades. And SPX is the best thing to use if you have a smaller account and under $25,000 and you're limited to 3 day trades in a 5 day business day rolling period. You can use / yes, just like that, and it's basically the same thing. But because this is a futures product, futures doesn't come under the PDT rule. So even if you do have a smaller account, you can still do 3 successful day trades, or there's just 3 day trades in general per 5 day rolling period. So yeah, just keep that in mind. So SPX, what you want to do is go straight over to the options expirations, and you want to pick obviously the 0 day to expiration. There isn't one right now because this is a Sunday, but at the market open tomorrow, this 1 day will be the 0 day. So for all intents and purposes, just pretend that this is the 0 day. Everything else is exactly the same. Very, very simply, we've got calls on the left, puts on the right, and we're going to basically sell an iron condor. Okay, so what you want to do is you want to look at this expected move here, shown by this vertical orange bar. You can also see the expected move in parentheses here, plus or minus 66.19. Your broker should show the expected move in parentheses if it doesn't show it visually here. In this case, tastytrade, they do both, which is great. Now, on the call side, you want to basically sell, well, on both sides, you want to sell a contract that's just on the edge of the expected move, and that's typically going to be around about 20 delta, 15 to 20 delta, give or take. So we've got a strike here at the 5645 that's just on the edge of the expected move. We're going to sell that. On the put side, 5515, we're going to sell that. And you want to do this at the market open, by the way, guys. At the market open, within the first, 15 minutes or so, you want to put this trade on. 15 minutes to half an hour is fine. I typically like to wait about 5-10 minutes because sometimes the market can be pretty crazy at the open, and then it tends to settle down. So I usually wait about 10-15 minutes to put this trade on. And basically, this is the setup here. Obviously, right now, this is a naked position, which means you have an unlimited loss potential. You need 100 grand in buying power to open this. Obviously, we're not going to do that. So what you want to do is you want to buy some contracts a little bit further out. Typically, about $20 wide works quite well. But obviously, if you have a smaller account, you might need to do less. But let's just go with $20 for this case here. So 5665, we're going to buy that. We're going to come over to the put side, and we're going to go $20 at the 5495. So we're $20 wide on either side. And in this instance, what's going to happen is we're going to collect $785 up front, and we're going to put up 1.2k in buying power, which is also what our max loss is. And this is basically the setup here. So we've got a pop of 81%. That's if we hold till expiration. However, we're not going to hold till expiration. We're going to get out at 25% of max profit. So as soon as you put this trade on, set up another order to execute. As soon as you hit 25% of max profit, that's going to be 25% of this max profit number here, and you're going to get out, and you're going to end up with about a 90+% success rate here. So this is a very, very high probability trade, which is what's going to allow you to basically cash in almost every single day, very, very consistently. If you do have a smaller account, you can make these, you make the spreads narrower. So $10 on either side. You will collect less up front, but you are going to require less buying power. You can be even more narrow than that. Now, when you scale up, the way to scale up is to widen out your spreads first. So you want to widen out your spreads first until you're at least $20. $20 is kind of the sweet spot. Once you're at $20, by all means, then you can increase the the number of contracts here, or the number of lots basically, but until you're at least $20 wide, that's what you need to do. Like I say, exit at 25%. When it comes to your losers, just let them expire, and get in at the open. You need to keep an eye on your buying power requirement. How do you know how much you should be using? We've got a free position sizing template. The link is in the description. You enter in the size of your portfolio at the top. You then enter in the VIX level, below it, and basically everything's going to be worked out for you automatically. Just stick to this. In this instance here, for this example position, this is a defined risk position. So you would come over here, the maximum amount to allocate to a single defined risk position is $5,000 for this exact portfolio. That's the maximum. So in this instance, 1.2k would be absolutely fine to allocate to this position. Just keep this in check. If you have a very small account, you may need to be more aggressive, but that's just the nature of the beast. And if you would like to learn in more detail about what we do and how we do it, click on EDS Premium, get yourself signed up. You will have access to this example portfolio where we do place these kinds of trades on a weekly basis. We do some monthly stuff as well. You're going to be able to see everything in real time, any adjustments that we make, etc. And also, there's a full course, so you don't need to know anything prior to joining. We'll teach you everything from start to finish. It is a private community, so you can speak with myself, other like-minded individuals. There's a 100% money-back guarantee as well. So once you have been through the full course, follow some of our trades. If you haven't been profitable after 6 months, then we will work with you for free until you are. Or you can just ask for a full refund. So it's completely risk-free. It's $9.99 a month to join right now. The price will be increasing once you're in. However, the price is locked in, so you are rewarded for getting in early. The aim of EDS Premium is to teach you the skill. We want to give you the skill once you've learned it. No one can take it from you. And we aim to get you to a point of where you are self-sufficient within 6 to 12 months. So with that being said, I will see you guys on the inside.